Alright guys, welcome back. This is Nico with part 2 of the crypto market price fundamentals. And this stems from the question of where do traders go to take profit? Now if you remember last video, and if you haven't watched it, I highly suggest you do. Please go ahead and click on the link in the description. But if you watched the last video, you noticed that we identified a series of key traders in the market and how they moved. On top of that, we also explained how the market was a zero-sum game and that somewhere or someone had to have the money at all times. So it doesn't matter if the price is going up or the price is going down, because the price is only a representation of where the equilibrium between the supply and the demand is at. Alright guys? So after this, we also spoke about what to consider when traders would take profit. Three of the things we looked at were liquidity, stability, and accessibility. Once again, I don't want to get into this in this video. I really suggest you watch part 1 if you don't know what we are talking about. So in this video, I'd like to talk about the actual numbers. So part 1 was understanding the psychology behind where people would take profit. Now part 2 is let's apply that psychology into the actual numbers. Let's look at where people are taking profit. And I did the screenshot yesterday, but I think it would be a better idea if we go straight to coinmarketcap for today. Now coinmarketcap today, see if I can move this. The market cap is at 338 billion. And then Bitcoin is 137 billion, Ethereum 50, and Tether should be down here, 2.2 billion. These are very similar numbers to the numbers I have here. So with that said, let's analyze these numbers. Now, you might see Tether up there, and this is a comment I always make. Please stop fudding about Tether because, truthfully, the numbers are not alarming. And we will see in this video why they're not alarming. So you get an idea. If you think Tether is bad, check out CKUSD. CKUSD is a coin that is trading around $81 million per day. Nobody knows the market cap. Nobody knows the circulating supply. And it doesn't even have a website. Yet, look at all these pairs. Look at all these pairs that are trading and look at the volume of trades on BSEX. Alright? So, before you go on and you say that, Tether is sketchy, oh my god, can't talk about it, huge no-no. It's not the sketchiest coin out there. And I hope you guys understand that. The sooner you do, the quicker you won't have noise distracting you from where the real information is. And really, that's what it's all about. I mean, if you look at the crypto market, you will notice that whether you're in the part of the cycle where everybody's a technical analyst and they're like, yeah, look at my Elliott waves. Yeah, look at my Wyckoff theory. We are in this part or this side or there, or people that claim to understand volume profile or sentiment analysis. Everybody is trying to get you to just look at one thing. And they're not doing it because they're bad people. They just don't know what else to look at. So they pick a story. Everybody picks a story. And in that story, they create a model based on the past that makes a lot of sense. And truthfully, it's not until you have enough experience in the market, and I mean the market as a whole, not just the technical analyst part, that you start to realize that you cannot marry just one story. You have to have very different stories, and sometimes they have to contradict each other. And that's where the true power of your decision-making skills comes into play, when you have to balance out two contradicting scenarios. But in order to balance them out, you have to accept both of them, and you have to try to maximize their qualities and minimize their ridiculousness. And it's only when you do that that you can face them against each other and make an approach to an intelligent decision. It's in these intelligent decisions that statistics will play in your favor. But that's decision theory, and I'll leave that for another video. Today, let's go back and look at these numbers again. So what I did was I grabbed CoinMarketCap numbers and placed them on an Excel spreadsheet. Now this was done at noon, and at noon we could see that the crypto market had $331.8 billion. Bitcoin was at about 137, Ethereum 50, Tether 2.2, almost 2.3. And if you take the crypto market and subtract these three, the rest have to be all the altcoins. Now this is the market cap, guys. And the market cap is not very precise in the representation of the money in the market. And that's because if right now the market cap is 137 billion and people want to buy 100 million Bitcoin, how many of those sell orders are in the same price line? Not everybody wants to sell you Bitcoin at the same price. And that's why the price would rise. Okay, the surge comes from when people want to buy Bitcoin and they ran out of Bitcoin at a certain price, so they have to buy it at the next price people are willing to sell. And that's how the market works too. If you see that there is more demand than there is offer, people will get smart and won't leave their Bitcoin at the current price. They'll raise the price because people want it, okay? Same way works for the bearish scenario. What's going on in the bearish scenario? The price is diminishing because people that are selling go and say, here, take my Bitcoin. And if you sell, you want to sell at the highest price, but not everybody wants to buy at that price. They want to buy at the cheapest possible price. And if they see there's a lot of offer, if there's a lot of supply and not a lot of demand, and people want to get rid of it, what are they going to do? They're going to buy as cheap as they can, okay? And that's what we saw. Now, that's the variation of market cap, and that's why you can't just say market cap is the greatest indicator, okay? But what you can say is that nobody can sell to someone else that won't buy. So I want you guys to realize that in the crypto market, it is very important that you don't just focus on whether you are selling or buying. You have to also focus on, are you selling fiat or crypto? Because if you're selling crypto for other crypto, that means that you might be shorting the crypto you're at, but you're longing another one. And at crucial moments, this is something to keep an eye out for. It's not the same if you see everybody's taking profit in fiat than if you see everybody trading crypto. If people are trading crypto, it means that volume is flowing in the direction of that crypto, and that should tell you something. Okay, that's the thesis of this part 2. That's what we're going to look at. But in order to do that, I want you guys to look at the most common or the representative coin that I will use for fiat, which in this case is Tether. Tether has a market cap of 2.2 billion. And if we look at it in comparison to the other market caps, that is an insignificant amount. Not a lot, okay? Now, very different on a 24-hour volume. On a 24-hour volume, we can see that Tether represents 11% of the 24-hour volume that was moved in the whole crypto market, okay? And that just still tell you, out of all the volume that was moved in the crypto, only 11% went to possibly the biggest fiat mover of all, okay? Let's add, if you guys want, an equivalent 10% more for other fiat currencies. That would be pretty alarming actually, because if there was a flow of fiat, if the price went up, then you know new money is coming in. But if the price went down, people are leaving the market, and that should be very alarming. Unless it's Chinese New Year, tax season, whatever you want to call it, and you have a pretty good justification, it might mean that regulation is coming and it's not looking good, that people are scared. Please keep an eye out for when Tether's volume takes over. Look at Ethereum. What's going on with Ethereum? There is not a lot of volume going on here. There's more fiat being traded right now in the market than Ethereum, okay? And that makes sense. That makes sense. There's a lot of altcoins growing. But just don't use any of these indicators as just the single indicator around. Alright, but let's look at this now. 10 hours later, I did this graph at noon. 10 hours later, what can we see? The 24-hour volume of Tether grew, but the market cap went down. Now, I put them side by side so you could see what's going on. And the circulating supply of Tether isn't something that instantaneously goes up or down. At the end of the day, in relation to how much Tether was purchased or sold, they'll make a correction to the equivalent amount that is still remaining in supply. But let's look at the market cap as a function of volume times price. So what we can see then is if market cap went down, then it means volume or price went down. Now, what does that say? Can the price go down? No, it's pinned to $1. But hold up, don't get ahead of yourself. Because since the circulating supply is not an instantaneous correction, if there is less circulating supplies than the beginning of the day, then the price will vary in order to make up for that variation and keep the market cap where it needs to be. So that's how the corrections occur. At the end of the day, if there is a market cap with a higher price than $1, what does that mean? That the circulating supplies went down. But if the price went down, then the circulating supplies went up. So let's look at that actually so you guys can see the equation. If the price of Tether times the circulating supply is equal to the market cap, then circulating supply can only be modified once a day, for example. So if the market cap goes down and the price cannot go down, then what's happening is that the circulating supply is less. But since we can't correct the circulating supplies until the following day, what's going to happen during that day to the price of Tether? It's going to go up. It's going to go up a percentage equal to the circulating supply that shouldn't be there in order to keep the market cap where it needs to be. But what happens if the circulating supply goes up? Okay, and what does it mean if the circulating supply goes down or up? If it goes down, that means that people are taking money out of the market. Money is leaving. But if the circulating supply goes up, that means that money is entering the market. All right. Now, if circulating supplies goes up, market cap goes up, but for 24 hours until the end of the day, we cannot change the circulating supply. So what's going to happen? The price is going to go down. And you can see this if you go to Tether. Your graph will tell you if the price is ever above $1, then you know market cap is going down. If the price is below $1, then you know market cap is going up. Is that correct? Above $1, market cap going down. Below $1, market cap going up. All right. I hope that's a useful little tool for you to see what's happening in terms of fiat in the crypto market. And also keep an eye out that Tether is not the only coin out there. Okay. Now for the last piece of advice I want to give you guys is, like I said, you don't know if what's being traded is a crypto to a different crypto or crypto to fiat. But you can look at that, and you should look at that every day to know what's going on. In coinmarketcap, you can go to trade volume to the 24-hour volume exchange, and you can look at what's going on. Okay? So let's take this example right here. If we look at whatever has Tether, okay, and this is just Binance, but if we look at whatever has Tether, we can say that 245 million plus 43 million is 288.6 million. Okay, this is USD volume. Now, if we take the total volume, if we take the trades and subtract the amount of fiat that was traded, this is the crypto being traded. Okay? And this is important because we can look at how much is being traded of each sort. It's a 30 to 70. And out of this 30, we don't know how much is actually leaving the market or just being used to trade. Because people make money trading all the time, okay? So I hope this is useful for you in checking out the market and looking at some type of analysis that I don't see a lot of in YouTube. Everybody's always talking about technical analysis or go read some white papers. But man, you can definitely learn a lot just from looking at CoinMarketCap. And that should tell you something about the transparency of the crypto community. Okay, you need to learn about transparency, what it means, and how you can use it to your favor, because that's one of the core values that cryptocurrency can offer the market and the users, which are us. So if you like the content, please give me a like, subscribe if you haven't, and check out my channel where I give tutorials about trading tools. It's called Learning Notes, and I'll leave the description below, or you can click on the subscribe button that I'm leaving on screen right now. All right, guys, take care and see you next time.